The trader that thinks in decades will always be more successful than a trader that thinks in weeks or months. Before we actually get into the points, I'm just going to explain that title quite simply. So you've often seen the best investors in the world, the likes of Warren Buffett, Charlie Munger, these people with massive net worths from investing. How do they do it? Well, they didn't get rich in their first year. They didn't get rich in their first 2 years. Do you think Warren Buffett made tens and tens of billions in 1 year of investing? Absolutely not. He was focused on obviously growing his money over time and consistently growing his money, meaning that over the time that he was an investor or still is an investor, he can generate massive amounts of money. And I'm pretty sure if Warren Buffett is making some of the percentage gains that a lot of traders on social media claim to make, he would be the world's first trillionaire. And obviously that's an easy way to see that that's not possible. So we can learn a lot from investors like Warren Buffett, even though we're not investors. We are day traders, swing traders, scalpers. No matter what trading style you are, I wouldn't say you're an investor because we're not investing. We're buying, selling. And then obviously we can use our profits to invest as well to grow our wealth. But we need to have the same principles as these long-term investors, which I'm going to go over in today's video. If you want to learn how I trade and get payouts like these, be sure to check out the link down below for the mentorship. If you're a prop firm trader, a person that trades their live accounts, you can all learn from the mentorship. So be sure to check it out. So back to the video. And one of the main key principles that I kind of feel like I've learned from investors is the power of compounding. People preach about compounding a lot, but they don't realize that it only really comes into play in the long term. Because you could look at your stats, someone could look at my stats even, my swing trading stats for example, I average 1.5 to 2% per month. If you put that into a compound interest calculator, where you work out over 1 year how much a £10,000 account will be worth, it won't be a lot. Granted, it won't be a lot. But if you do that over 20 years or 30 years, the results will be staggering in comparison. So that small 1% per month or 2% per month even, that most traders wouldn't even get out of bed for. Traders out here saying that 2% a month is absolutely easy. And traders that are actually doing this consistently are going to be great traders. But then you also get the other side of it, that traders claim that they're making 10%, 20% a month consistently. And I just don't think this is true in the slightest. Because if you put in on a compound interest calculator, I'll put it on the screen, even 10% per month, starting with a $100,000 account, over 5 years, you'll be like, oh my God, how are these traders not super rich? Even over 20 years or 30 years. When have you ever seen a Forex trader with these returns? You just haven't seen it. And that's because it's not possible. People don't make these returns long term. And if they did, they wouldn't sell a course. They wouldn't sell a mentorship. They wouldn't sell anything because they'd be so rich. They'd just literally be, everything in the house would be made of gold. That's a simple way to put it. I always preach that 1 to 2% per month is kind of the sweet spot. If you can make 3 to 4% per month, that is amazing. And let's say you have a good month where you make 5% or 10%. That's again, amazing. But if you average 3% a month, 2-3% per month, you're outperforming the S&P 500 on average. You're outperforming the vast majority of hedge funds. And you're also outperforming the 95% of losing Forex traders. So even if you make 0.5% per month, you're making more profit than 95% of Forex traders in the first place anyway. So that also gives you kind of an extra boost when you're making profits, because you realize that I'm actually outperforming so many people that have tried this but failed. So even if you are making small profits, you're doing well and you should keep it up. I often see people say in my comment section when I post my profits, my WillssFX book, and different stats like this of my results, and it will be an average of 1.5%, 2% per month. And the comments will often be like, well, how can you make a good living? How can you even make money trading with these low returns? And people often reply to these comments saying that if you have enough capital, 2% is a lot per month. And this is something I definitely agree with. Let's say, for example, you're trading a $400,000 funded account, which is very, very doable. majority of people watching this video within 6 months, a year, could get to the stage where they are trading with a 400K funded account. So we'll use that for this example. $400,000, 2% per month, you're making $8,000 per month. I mean, I'm pretty sure that's a good gain. Let's say people are going to say in the comments, oh, what about the profit splits and everything like this and the tax? Yeah, we can take that into account. So the profit split, let's say you lose 10%, you're now at 7,200. And in the UK, that will get 20% tax. If you're doing it for a business, for example, 20% off of that, off of 7,200, and you're left with around $5,760 left, which is pretty good. You're making 2% profit, but you're making $5,700 per month. And obviously, if you add that up over the year, you're making a pretty good salary just from making 2% per month. The way I trade my swing strategy, I'm only trading for 1 to 2 hours per month anyway. So I'm making this 1 to 2% per month, but it's only taking me 1 to 2 hours per month as well. So if we base it on the hourly rate, because I only have 1 or 2 setups per month because I'm trading, higher time frames and I'm very selective with the setups I'm taking. Let's say I am trading a 400K account, for example, my hourly rate would be around $2,500 to $3,000 an hour. Obviously, it's not like I'm working 40 hours a week by doing this, but it does put it into perspective that if I can work for 2 hours and make $6,000, how many hours are left in the month? A fair few. And you can obviously live off of $6,000 per month after tax. If we're going up in account size too, you could then take a percentage of that into your personal account and then use the compound effect to grow your personal account alongside the prop firms that you're actually trading on the side to fund everything. I always believe that you should have a personal account, even if you're just copy trading your prop firm trades across, or using your personal account as a master account, focusing on growing that, but then also copy trading to the prop firm accounts. That's a great way to do it, because obviously the personal money I always think should be the number one priority, as you keep 100% of it. No one can deny your payouts. As long as you're using an FCA regulated broker or a broker that's regulated in your country, you're going to be pretty safe. Whereas with a prop firm, you do have the risk of payout rejections or increased spreads, high commissions. There's a lot of different issues with prop firms nowadays, especially with prop firms losing all their money and ending up not being able to pay anyone and closing down, which has been an issue that has been quite serious over the past few months, and it has obviously affected my trading. So that point emphasizes that cash is king, or capital is king in terms of trading. Money makes money, and if you don't have money, you won't make money. You can make small gains and not be happy with them on a small account, but if you're making small gains consistently on a small account size, but you're not happy, it just means you don't have the capital yet, which you can obviously scale up with the use of prop firms or just compounding and consistently depositing into your personal account. This is obviously a great way of doing it, because the sooner in your trading you get into that mindset of small consistent gains add up over time, the higher the chance of you being profitable and actually being able to grow your account consistently over the long term. That's my exact aim with my swing account. I'm growing it consistently long term, and as long as it's making an extra 5-10% a year or even more, the first 7 months we are up around 10% already, which is great, which means we'll make over 10% this year. Ideally, that would be a good thing. And we've been trading it since March, so it's been quite good results so far. And this kind of, again, reinforces the fact that patience is key. When we're talking about thinking in decades, we're talking about being patient. We're talking about waiting and not expecting the best results, all the profits this week or this month or even this year. It's just not going to happen unless you have some crazy months, unless you manage to scale to multi 7 figures in your prop firm accounts and get massive payouts. You're not going to suddenly go from zero to hero in the trading world in 6 months. You can get to a good point, but you can't get to the point of, lots and lots of money without having to go through the struggles and actually being patient with your journey. If you expect the best results, you'll be disappointed. You have to go in trading with realistic expectations. I feel like it's one of the only industries You should go in with realistic expectations and not shoot for way too much, because that can lead you to chase profits. If you end a week in a loss, it doesn't matter. The markets aren't going anywhere. You have another week next week. You have a week after that, a week after that, 52 weeks in a year that you can trade. It's amazing. There's no reason for you to try and force profits out of any day, out of any week, out of any month, out of any year. I see a lot of traders that they try and force themselves to make profit. They force themselves to end the month in profit, and they end up making stupid mistakes in the process. And if you do this long term, just trying to get into profit every single month, it will add up. Let's say you make 5 mistakes over the year that cost you a total of 5%, so 1% per mistake. As we said, with a 400k account, 5% is $20,000 that you could have missed out on. So put it into perspective. Next time you are actually making a mistake, realize, okay, I lost 1% on this mistake. If I was trading at the level I want to trade at, what would that mistake have cost me? And then it'll kind of put it into your mind, okay, that mistake was quite costly. I don't want to be doing that again. And then it will reinforce the fact that, okay, long term, if I want to get to this level, I have to be patient. I don't want to force the trades. I just want to grow consistently. It could be small, but it's got to be consistent. And that's all that really matters. So if you have any thoughts about this, and if you do think in decades, be sure to let me know down below.